Hello once again everybody, this is Rich with High Percent Trading. This short video is going to show how the crude oil contract was traded this morning. As some of you will recall, there was also a crude oil inventory report today that came out at 11 a.m. Eastern, that's 8 a.m. Pacific. I'm on the Pacific Coast time zone. And that was because it was delayed one day because of the holiday, the Veterans Day holiday that we had. But we're going to show how to do that. Now, again, in consistently showing what we've been showing for the last few weeks here, we're using the accelerator method of trading. That's a momentum-based method of trading, trading crude oil off the pit open, which is 6 a.m. Pacific. That's 9 a.m. Eastern. If we follow the two-arrow rule, and again, if you remember what the two-arrow rule was, is if we've already had two arrows in the same direction, we're going to disregard anything. And you can see if we look back here to earlier on, we had at least three here and then a fourth here before we got to our 6 a.m. So because of that, this particular arrow you would have to disregard. I'm going to show you one other nice way to trade these markets as well, and that is using the Band-Aid, which this is the indicator, the Band-Aid auto indicator. And you can see that I have it set for the pit open, which is 6 a.m. So at 6 a.m., it draws this band. And this is actually one of the ways that we used to trade crude oil just by itself prior to the advent of the accelerator. And we can use it in conjunction. So quite simply, if you followed the two-arrow rule, you would not have gotten the trade here. However, if you followed the old method of trading, and I use these in conjunction, our trend was down. That was the mid-band, was down. Therefore, we're going to take a short trade once we close below the band. If we had closed above the band, we would have waited for an accelerator arrow up in the up direction. That would be the only way to take that trade using the accelerator with the band. But since there was none, and we closed below the band, that was your short trade. So you were able to get this very nice trade to the downside short. You were able to catch this quite a ways down with a very nice profit if you had a runner, anywhere from 25 to 30 ticks on the runner. Now notice there were three more trade entries, arrows here, not entries, but arrows, 1, 2, 3. That was all still part of the two-arrow rule. So there's no trades here. The next trade we're looking at then is going to be right here, because it's a long trade, a nice long trade for a good scalp of 10 to 12 ticks, and then following the two-arrow rule, a second entry here, and that trade went on to make a very nice profit all the way up if you held a runner. That was about a 65 to 70 tick run here in the span of about 10 minutes. Now notice this is arrow number 3, 4, 5, and 6. Again, following the two-arrow rule, we disregard these arrows. It doesn't mean that these trades don't work, but again, we like to trade the high percent trades here. That's the name of the company, High Percent Trading. We go for those higher percentage trades. We found that by following the two-arrow rule, that's the best approach. So this takes us to the first hour then of trading. Basically, most of the traders that took this type of approach today, they were done. They had met their goals in crude oil. But again, as I mentioned, we also had the oil inventory report today, the crude oil inventory report. Again, we're going to wait the 2 minutes after the report. That report came out at 11 a.m. Eastern. That was 8 a.m. Pacific. We wait 2 minutes and then we start looking to take trades. Okay, so moving further along, here's our 8 a.m. Pacific time. And notice what happened here. You get this giant shotgunning approach, lots of arrows, lots of trade setups. Crude oil is untradeable during this time. So regardless of what's going on here, you cannot trade crude oil through this. You have to wait the requisite period of time, and that is you have to wait out here until 8:02. Okay? 8:02 puts us right here. Now look back. notice if we look back, follow the 2-arrow rule, we've already had a sequence of short arrows in here, regardless of the fact that it was a fast market or not. Still have to abide by that rule. So there's no short trades we're looking at taking. We're going to take the first trade in the opposite direction, and that's right here. So a very nice long trade here off the accelerator, entering right around the mid band here. That market moved up roughly about 40 ticks. Had a second entry. If you follow the 2-arrow rule, second entry here, that did not work out. So you had a nice 40 tick trade on a runner if you held it up. This one got stopped out for about a 6 to 7 tick loss. Had a subsequent trade here, short for a nice scalp, but no runner. And then, as this is taught, you take one more bite out of the apple. You can short it again here, even if you forgot to do that. And again, we stress that traders, in order to be successful, need to do that. But even if you didn't, you had your second arrow set up here. You got the nice big trade. That trade was a huge home run, entering right around the 42.27 level, and this market dropped all the way down to around the 41.70 level. Again, a good 45 to 50 ticks on a runner. Okay, good 45 to 50 ticks on a runner all the way down. By this point in time, you should have met your goals again if you were trading crude oil, because you had the really nice trade here. You had the second trade that didn't work out. You had the third trade here that you got a scalp but no runner, and then you had the re-entry here or here for a nice big runner to the downside. Should have met your goals here. And that brought us a half an hour then past the time of the report. That's typically the time frame that we like to focus in on. So trading half hour after the report within that window is a good time. You met your goals, you're done trading. Again, trading is not a marathon event. Trading is all about getting in and out quickly, making your profits, trading those times of the day when you expect good linear movement like we'd had here, using momentum type trade methodology as we're doing here, taking advantage of those moves. And again, this is the same way that the crude oil is traded day in and day out, and most especially also when there's an oil inventory, we apply this again one more time after the inventory. I hope this was helpful. Thanks for watching. I hope to see you in the live markets analysis room. If you haven't taken a free trial, please come over to the website, high%trading.com, or stop in and see us this week or next. Again, thanks for watching. I hope this was useful for you. And again, I think you can see the type of approach that you need to take when these markets are having the good linear type of movement that they do, that you get after pit opens and or major reports. So thanks again for watching, everybody. Have a very nice day. Bye-bye.